Today, we're going to re-examine the never sell your Bitcoin strategy and how to get ahead of what could potentially be the new world order on global macro finance, how inflation and tariffs will affect things going forward, at least speculatively, and what you can do to, again, stay ahead. So stay tuned. Tired of meme tokens that promise the moon but leave you holding the bag or just rug? It's time to flip the narrative. Flapjacks launched transparently with locked liquidity, token burns, and real-world utility like exclusive fitness perks. This stack is built to last. Forks divide, syrup binds. Join the stack at flapjacks.xyz. Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify, and operate with integrity and transparency. So in today, like I mentioned, we're going to kind of look at two things to try to figure out what the state of the future will be for our financial opportunities. Basically, how do you live day to day? I covered the video before about how to never sell your Bitcoin. Again, we hear that phrase, but I've never heard anybody actually break it down and share the strategy. And that requires, which we'll dive into again, but it requires that you actually have some Bitcoin available, be able to get a Bitcoin backed loan, and most importantly, you are not living outside your means, meaning you're able to bring in more than you spend, because there is volatility in Bitcoin and you have to be able to weather that storm, or else you lose the Bitcoin and the money that you were spending month to month to support that bill. So we're going to examine that in a little bit, but first I wanted to bring up inflation and tariffs. So this is mainly affecting people in the US, my US audience, because this is a blanket global tariff issued by the US. So countries like where I'm at, they have tariffs on their goods going to the US. So Cambodia, I forgot what it is from Cambodia going to the US, like 25% or something like that. It doesn't really affect the day-to-day living standards of the Cambodians here. So I'm not going to be examining it from that perspective, because that would literally be like every country and how they're affected by this reciprocal tariff policy. But more importantly is, or more easily identifiable, is how it will affect the US, and understanding that versus inflation. So with the tariff, we'll use just the 10% because that's the easiest number to fit our heads around. And that's the one that went across unilaterally for everyone as a blanket flat. What that means is that the price of your good is now 10% higher, period, at a minimum. So if you buy something, if you were buying something before at $100, it is now $110, and that is the new norm. Whereas on the flip side, inflation is something that happens year over year. So depending on where you live, there are varying amounts of inflation, but let's use that 10% again, just for simple math. So if there was 10% inflation in the country that you lived in, that good at the end of the year will be the same as the one coming from the tariff country at 10%. So that'd be $110. However, the next year it'd be 10% higher than it was the previous. So in year 3, it is now $121 because you add 10% of 111. Then in year 4, it is now 121 plus 12, 133, because you're adding another 10%. So with inflation, it continues to get high, and there is no cap, so to speak. So the reason why I'm bringing this up is because inflation, in this ideology of never sell your Bitcoin or living off your Bitcoin, humbly stacking sats, you can find a way out of that fiat Ponzi trap by saving in Bitcoin and spending in stablecoins. And that would require, obviously, you have a way to off-ramp that in the country that you're in, and you're on an exchange. So that does come with some other risks. But I bring this up because the stablecoin rates on average, let's go to the actual average here. So the world inflation rate, the CPI right now, is about 5.6%. Well, that's not right now. That was in 2023. That's the latest that we have. So some countries are higher, some are lower. But a lot of stable coins are offering a higher than 5.6% interest rate. So that means at a minimum, if you were just to be putting your money in a stable coin, now this fluctuates. I'm not saying it's going to stay there, but since the issuance of stable coins, they have always been a better rate than a standard savings account in your typical fiat currency. Now, depending on your country, you might find CDs and stuff like that that offer higher rates, but this is a great way, especially if you're in a country that it's weak against the dollar and it's better to earn in dollars and spend them than it is to spend your local currency. This could be very beneficial. So like for me, I earn a US dollar paycheck, and therefore it's kind of an easy exchange into one of these. It doesn't change the value, but now I'm able to earn 6%, 12% on FDUSD on that per year. And in the US, even though, close that. That's what I was trying to bring up. Even though in the US, the actual inflation rate that they have in 2023 is 4.12. So that can work out better if you are taking your paycheck and putting it into stables. Now, again, there are some risks depending on the platform. Ironically, though, the least risky and most secure, most transparent for US citizens is USDC and Coinbase. So I would say it's on par with most of your banks at this stage. I don't know about FDIC insurance and all that stuff like that, but if you're trying to move out of the fiat Ponzi, this is an opportunity or option. Now, what really puts the icing on the cake with this, to me, is looking at stables as your checking account and Bitcoin as your savings account. So if you're able to get unbanked and move all the way into crypto, and then you have a way to off-ramp pay your bills, things of that nature, crypto credit card or whatever, or at least even a small amount, then you can get your paycheck, put it into USDC. And I believe on Coinbase, you're earning 4.51%, I think. So it's like right at the inflation rate. So at least that means, no, it's a little above. That means you're not losing any dollars to inflation year over year, as long as Coinbase stays at that rate. And then whatever's left over that you would normally save, you could put into Bitcoin, as long as you have that 4-year time horizon to be able to see it appreciate. Now, the more aggressive strategy that I mentioned to you guys is the Leaden back loans. I still have mine out. I haven't made any payments on this. I'm not doing anything with this right now. All I did with this was buy Bitcoin with it. So this is not quite the living off of Bitcoin that I plan to do. That'll probably be around July when I transition over to South America, and will get a loan basically against my Bitcoin collateral to pay for my first year, or at least 6 months of an apartment / condo. And that will give me a good indicator to see how this works out. I'm still looking at Leaden. Even though their rates are higher, they have been the most trusted and most secure. There's a really good deal on Coinbase with Morpho, and it's very simple to do. I'm going to try it, but not with that large amount, because with something like this, the biggest risk is that you are no longer, not your keys, not your crypto. So just by default of buying Bitcoin and leaving it on exchange, you already are at risk of that exchange loaning it out and not having it, like the FTX collapse, or them halting withdrawals like we've seen Coinbase and them do. And then when you loan it out, you're now going to another person, and now you're hoping that they keep it or they don't put leverage on it. So there are definitely exponentially stacking risks whenever you do this loan option using Bitcoin as collateral. And I know that's not for everyone. However, it is the only option I'm aware of where you can keep your asset and live off of it. I don't know another way to stack Bitcoin and then actually put it to use for you, and not just stack it like literally gold bars collecting dust in the corner. The whole purpose of this is that we know the fiat system is collapsing and failing, and we want to get out and still live our lives in a way that we are not adversely affected by the horrible monetary policies. We actually want to benefit from this. So if you know of another way besides Bitcoin backed collateral, please let me know. That's the only thing I'm aware of that can put Bitcoin to work for you. Now, obviously, you could find some DeFi platforms, you could yield farm, but you're still doing a risk, not your keys, not your crypto. Whenever you farm, you are putting it into a contract, and you're hoping that that contract does not get exploited or hacked or a bridge issue or something like that. So there's all sorts of risks once you decide to no longer self-custody and you actually want to put that collateral to work for you. But if you do that, then this is the simple playbook. So literally step number 1 is spend less than you earn. This does not work if you are living outside your means, because you need to have a safety net. I cannot stress that enough. In the event that Bitcoin goes super volatile and you will need to top up your loan. Like I've shown you guys with mine, this one, both of them are in good standing. You want to have a loan to value ratio. The lower, the better. That means you're less likely to get liquidated or margin called or whatever the phrase is for this. So for me, with this rate, I believe it's around a Bitcoin price of like 60K, high 50K range. So that means as if Bitcoin started going to 70, high 60s, I could just top up my loan. And that means I have additional either Bitcoin on the side, or I have the actual cash sitting in stables to buy Bitcoin at those prices to then either pay off the loan completely or add to it. The idea would be to add to it, because if you want to do the strategy right, you're never actually paying off the loan. You're just rolling it over every year and continuing to stack sats. So that's step number 1, spend less than you earn. Number 2, this is primarily for my US based people. I know credit cards are not big in some other countries, but I say this because of the simple fact that there's a lot of fraud and hacking going on. And and this happened to me, if your debit card is compromised, then that means they have direct access to whatever funds you have in that account. Whereas with a credit card, it is much easier to get that money back from the credit card company. And they're easier to usually on an app now, just turn them on and off when you're not using them. Whereas your debit card, that is direct access to your cash, and credit cards, it's much easier from what I've seen to get back. In addition to being able to leverage some of the rewards points for cash back. So what I did is I have basically 6 accounts. 2 US accounts, like two checking accounts. One's international, one's local. That's in the US. Then I have 2 crypto exchange accounts. That's Binance and Coinbase. And then I have 2 local Cambodian accounts. So I have 6 accounts. And I was having different monthly expenses coming out of each one. Like for my US business stuff, I had it coming out of 2 different US accounts. Then for my local stuff in Cambodia, they were coming out of accounts. Then for Binance and Coinbase, I had different DCAs going there. So I had all this stuff going on. It's like I went ahead and just put this all on one credit card and consolidated everything into one account. So it's easier for me to look at and see what that total amount is each month. And then I can buy Bitcoin on that. So using one card, putting it all together, that also gives me more rewards points to trickle into, because instead of me spending $100 across 10 different platforms, I can now spend $1,000 on one card, and that's earning 1,000, whatever that credit conversion would be for points or rewards. Then you buy Bitcoin with that. So in my case, whatever the credit card balance is, let's just use that $1,000. I buy $1,000 worth of Bitcoin. But in order to pay off the loan, like in this, you have to have 50 or twice as much collateral. So I would need to already have, that's why I say spend less than you earn. I would need to have $2,000 worth of Bitcoin already to just make that first loan payment. And then that means each month I need to have $2,000 coming in order to make that $1,000 loan payment. So that's where putting savings in Bitcoin and spending less than you earn come into play, because you need to have the additional buffer to be able to afford that 50%. And even more than that, just in case Bitcoin takes a dip and continues on that for a trend, and you're getting close to your LTV ratio getting called. So it is a sound strategy, and it can definitely work and has been proven playbook by the rich and wealthy, the ones that own land and assets and stuff like that, real estate. They have passed that down from generation to generation, and they continue to do so. And they don't sell those assets. They take out loans against those assets. So it is risky, but it does work. It's still being determined with Bitcoin, and that's the other unknown, because you got to be able to trust the entity that is handling your Bitcoin. Hence why I am only focused on Leaden at this stage, but I will try out Morpho on Coinbase just because of how simple it actually is. Like, everything would stay within Coinbase ecosystem, and I do like that, just for simplicity's sake, being able to see it all from one location and not have to go. Like right now, I got to use a VPN, then I got to get it in cash, they wire it to my bank, then I got to get it from the bank and put it back into Coinbase. Like, just a pain to go through those steps. And on Coinbase doing their loan, it goes directly into USDC. Leaden has USDC backed loans, or you can get it out in USDC, but apparently it's not available in Texas, which is what my ID was tied to in order to get this account open. So there's still all sorts of complications and hoops to jump through. But at the end of the day, if your goal is to stack sats and accumulate as much Bitcoin as possible, then you're going to have to jump through some hoops somewhere to do so. And as I showed you guys before, I'm evaluating success in this cycle. Even though we've had up and down volatility, I'm doing exactly like Jeff Booth said, and looking at evaluating everything in Bitcoin. The natural state of the free market is deflation, and Bitcoin is that free market. So I don't really look at this balance here as much. I really want to just see this number going up. And as, let's just say by the end of the year, I've accumulated one whole Bitcoin, and then Bitcoin is now worth $250,000. Well, that is plenty for me to be able to live off of on a month-to-month basis, by just spending a fraction of that in a loan, and still with my job adding in and stacking each month, adding more Bitcoin to that balance, and then again just rolling over that loan. That's why I showed you guys I made this simulator from ChatGPT to be able to understand what that looks like. So it is 100% possible, but it's not without the risk of the exchange and the loaning out and things of that nature. But it is something I think everyone should look into if you're trying to escape the Fiat Ponzi rat race. So use Bitcoin as a savings account, USDC, USDT, or any of the stables on a exchange you prefer as a checking account. And most importantly, spend less than you earn and stack sats the entire time. All right, that's all I got. Smash that HBO special, help a brother out, like, subscribe, comment down below. Until next time, live daily and achieve your impossible. See ya.
Want to pay your in real life bills with crypto? How about send crypto directly to anyone with a bank account? Spritz Finance is a decentralized solution to be your own bank and connect your crypto earnings to real world bills and payments. They do not take custody of your assets and allow support on multiple blockchains and Web3 wallets. Sign up below using my referral link and you will get $50 back when you make your first $50 bill payment with crypto. Additionally, I will be using referral bonuses to airdrop, donate, or burn based on community feedback. Sign up now.